Stop. Before you sign a single document, before you let a realtor show you one more house, and before you even think about your future backyard, you need to hear the truth. The American mortgage system is not your friend. It is a machine designed to extract as much wealth from you as humanly possible. In today's volatile market, buying your first home isn't a dream, it's a financial minefield. While you're dreaming of BBQs and new furniture, a massive army of lenders, brokers, and insurance giants is quietly calculating your ignorance tax. I'm talking about a hidden drain on your bank account that will steal $50, $70, or even $100,000 of your hard-earned wealth over the next 30 years. The worst part? You won't feel the pain today. You'll feel it over decades of overpaying for a trap you walked into with a smile. But today, the game changes. You're not going into this blind. Welcome to the mortgage trap. Today, I'm handing you the defensive blueprint to the 7 most lethal mistakes that keep first-time buyers house poor for life. We're going to strip away the industry jargon, expose the hidden fees, and give you more leverage than 90% of the people currently fighting for a home. Let's save your future, one trap at a time. Mistake number 1, the credit score illusion. Mistake number 1, trusting the free credit scores you see on your phone. Here is an industry secret. The score you see on Credit Karma is not the score your mortgage lender uses. Lenders use a specific, much harsher model called FICO score 2, 4, or 5. Let's look at the math of the trap. Imagine you're buying a $400,000 home. Buyer A has a 760 score and gets a 6.5% rate. Buyer B has a 660 score, just 100 points less, and gets a 7.5% rate. That 1% difference sounds small. Over 30 years, buyer B will pay over $90,000 more in interest. That is a luxury car, a college fund, or your entire retirement. Gone. Before you even talk to a bank, you must pull your official mortgage credit reports. And for the love of your future, do not buy a car or open a new credit card until you have the keys in your hand. The bank is watching your every move. Mistake number 2, the pre-approval versus pre-qualification trap. In this market, showing up with a pre-qualification letter is like bringing a water balloon to a gunfight. A pre-qualification is just a guess based on what you told the bank. It has zero legal weight. A pre-approval is the real deal. This is where the lender actually audits your tax returns, your W-2s, and your bank statements. This is your license to hunt. Without it, you are an emotional buyer, not a professional one. In a bidding war, a seller will take a lower offer with a solid pre-approval over a higher offer that is just pre-qualified every single time. Know your ceiling before you look at the floor plan. Mistake number 3, underestimating the closing costs. This is where the dream dies at the finish line. You've saved your down payment, you're excited, and then boom, your lender sends the closing disclosure and you see an extra $12,000 to $15,000 you didn't expect. Closing costs in the US are typically 2% to 5% of the price. This covers origination fees, the bank's fee for just saying hello, title insurance, to make sure the person selling you the house actually owns it, escrow, prepaids. This is the big one. They want months of property taxes and insurance up front. If you don't have this cash, the bank will offer you lender credits. Don't fall for it. They'll give you the cash now, but raise your interest rate, costing you 3 times more over the life of the loan. It's a classic mortgage trap. Mistake number 4, the 20% down payment myth and the PMI trap. Lenders love the 20% down payment myth. Why? Because if you dump every last penny into the house to reach 20%, you have 0 emergency savings, 1 roof leak or job loss, and you're in foreclosure. In the US, you can get a conventional loan with 3% or an FHA with 3.5% down. Yes, you pay PMI, private mortgage insurance. But remember, PMI protects the bank, not you. However, On conventional loans, PMI isn't permanent. Once your home value goes up, you can drop it. Keep your cash for emergencies. Don't let the walls of the house eat your last dollar. Mistake number 5, ignoring the total monthly debt, DTI. The bank uses a ratio called DTI, debt to income. They might tell you that you qualify for a $4,000 monthly payment, but the bank doesn't care if you like to eat, if you have kids in daycare, or if you ever want to see a movie again. They look at your gross income before taxes, but you live on net income. If you follow the bank's limit, you will be house poor. You'll have a beautiful house you can never leave because you're broke. On this channel, we use the mortgage trap rule. Keep your total housing costs below 28% of what you actually bring home. Stability is more important than square footage. Mistake number 6, skipping the professional inspection. In a hot market, realtors will pressure you to waive the inspection to get the house. This is a trap. A house is a machine. A $500 inspection is the only thing standing between you and a $50,000 foundation repair or a $20,000 roof replacement. Think of an inspection as your get-out-of-jail-free card. If the report comes back bad, you can walk away with your deposit or force the seller to pay for the repairs. Never buy a house with your eyes closed. The bank won't help you once the roof starts leaking. Mistake number 7, the homeowner's insurance escrow shock. Finally, never treat insurance as an afterthought. In states like Florida, Texas, or California, insurance premiums are doubling or even tripling. If you buy in a flood zone or high fire area without a quote first, your affordable payment could jump by $600 a month overnight. Ask for a clue report to see the house's claim history. If that house has had water damage 3 times, you might find it impossible to get insured. If you can't get insurance, you can't get a mortgage. The trap snaps shut. Conclusion: your survival plan. Buying a home is the biggest financial move of your life. It can build generational wealth, or it can be a 30-year anchor around your neck. The choice is yours. Avoid the credit traps, calculate the real costs, and always keep an emergency fund. If you're ready to beat the system, hit the like button and subscribe to The Mortgage Trap. We expose the secrets the banks want to keep hidden every single week. Have a question about a deal you were offered? Drop it in the comments and let's look at the fine print together. Don't just buy a house. Be the one who owns the deal. Thanks for watching.